I have a high bar, Marcos. I don't watch movies if they have got a 56% Rotten Tomato score.
What? Brett, all the Fast and the Furious.
No, I haven't been watching Fast and the Furious.
You're, dude, you've been pigeonholed. You painted yourself into a corner, the Fast and the Furious corner. It's got a lot of bright shining lights and pretty colors, but man, is it rough.
That reminds me. Let's see if I can still find it. The other day, I got a text message from I'm not sure I was still there. Probably not. I got a text message from an Instacart driver. She said, I'm going to drive like Gino Torretta, but safe to your house. And when she showed up, I said, "Oh my God, Fast and the Furious fan?" And she said, "No, my husband wrote that. I'm just the one that come with your groceries." It's like, that's
I'm gonna
awesome.
go, hold on, but you got something wrong just because Gino Torretta is a quarterback.
Hmm. Yeah, could be.
Yeah,
Torretta.
dumb, dumb,
Dom
Toretto.
Torretta. Yeah. I
That's
watched the Dolphin game last night. That's
I'm
probably why I
gonna
came to
drive
mind.
like Gino Torretta.
Wasn't he? No, he's a Jet. He was a Jet or he was a Dolphin? Jet?
In my head, he's like a Redskin, but maybe not. I don't remember. That's
So,
hilarious, dude. I mean, yeah, he drove down the field like Gino Torretta.
welcome, ladies and gentlemen, to another jam-packed, exciting episode of Talk Your Chart. I am Brett Horowitz here with the magnificent Marco Segura. It is December 12th, 2023, and we're going to start with the big news of last week, Marcos, the jobs report. So let me read you a few numbers from that report, which I think make a very compelling case that I was right. Here we go. So the quit rate in the last month was down to 2.3%. How many people left their job voluntarily? That was down from 3% back in April of 2022. There are about 2 million people who are looking for jobs who are applying for continuing benefits, unemployment benefits. But that's about the same or a little bit less than the historical average, even though it's higher for the last few years. We're getting about 150,000 jobs per month, which is sort of a sweet spot. It should continue the expansion, but not enough to trigger a Fed hike. And the unemployment rate dropped from 3.9 to 3.7%, slightly above the 3.4 it was, which was about a 50-year low earlier in the year. So I think the people are speaking to say that your camp that's in the recession is a very lonely camp right now.
The markets have spoken, and yeah, it'll be weird if the recession hits in Q4. Weirder things have happened. Remember that it is a lagging thing. So the National Bureau of Economic Research will let you know the recession happened after it already started. So we will not know if I was wrong or me, all my friends were wrong until
Really?
beginning of next year. But yes, I will go ahead and let you take your mini victory lap. It does look like the recession has been pushed into 2024 or beyond.
Are we going to start calling you Dr. Doom here? Like, are you just habitually doomy?
Wow,
Gloomy?
that I think that escalated quickly, Mr. Horowitz. I don't appreciate the tone. I will go ahead and refrain from bringing up all the instances when you played Dr. Doom better than your average person.
Oh my God. Look, I mean, the only thing that the story is not fully written, right? So there is some worry that next year the jobs continue to trend lower and lower, and so the Fed has to loosen and lower interest rates because we're not out of the woods completely, but it's looking pretty good. I'm surprised the 10-year and 2-year are still inverse. There's still that opposites there where you think the 10-year and 2-year would flip now because the recession is not going to happen, but I guess people are still worried it could still happen.
Yeah, I mean, it's all from it got real low July of this year where the spread was 1.06, which is the largest in the last, call it 50 years, basically, or 40 years. It's jumped all the way back up to just half a point. So still negative, but materially the magnitude is much, much less. Does that call a recession? Sure, it's worked. Although the last one I'll point out was kind of saved by the pandemic, so to speak. It inverted and then the pandemic happened. So whether natural or unnatural, it happened. Um, My charts, I think I'm gonna let you cook on your chart spread because mine just kind of flow in a kind of a little 1, 2, 3. But unfortunately I'm giving Jerry Powell the soft landing call.
Oh, he is the man right now. The man. So the other exciting thing that happened last week that made a lot of headlines was gold settled at $2,071 a troy ounce. No idea what a troy ounce is, but it's a
It's
troy ounce,
expensive.
topping the previous high of 2,051 an ounce hit in August of 2020. It is up 318% since the end of 2004. Why is gold up, Marcos? There's lots of reasons why gold is usually up. Let's look at the reasons why gold is usually up. Or
Please.
did you want to give your an answer as to why you think gold is up?
I think gold is up because I don't know. You tell me. I don't have any fun reasons to give.
So usually people will buy gold in front of an inflationary environment because gold can typically keep its value, but
Yeah.
inflation is falling, so that doesn't make a lot of sense. When economic downturns are here, people are nervous. They tend to buy gold, but the economy is still strong. Gold did pop a few times after the banking crisis last year with Silicon Valley Bank and when Russia invaded Ukraine. But the real reason that gold is up so much is that central bankers are buying a lot of gold. Um, Led by China, Poland, and Singapore, central banks this year are on pace to surpass their record gold purchases of 2022. And so when you've got people buying gold, no matter what the price is, that's going to keep gold at a high point. And that's what we've seen here in the last several years.
Why do they buy gold? I guess they love gold. Yeah, I don't know. Gold's a fear asset from a retail perspective. People like to keep it on reserve, but that's for fun. China's known to have a ton of it. US still does. We're not going back to a gold-backed dollar, so yeah, they can have their gold. Do you want gold, Brett? Because I don't care for it.
I don't want gold. I don't think our investment committee is looking to buy gold. But here's an interesting story. I made the statistic, or I said it's up 318% since 2004. If we compare that to the S&P 500 since 2011, and this is sort of like we talked about the movie Clueless. There was a saying there, she's a Monet. She looks good up, from far away, but up close, nothing to write home about. In the
Sure.
last 11 years, gold is basically flat, barely up 2.8%, while the S&P is up 292%. So
That
yes, gold
hurts.
has had a nice rally the last few years, but going back the last 11 years has made nothing virtually. It
Yeah.
just doesn't do
But
anything.
but but wait, don't you at least get like paid to hold gold, like a dividend or something?
As far as I know, what kind of gold dividend is there?
There isn't, dude. That's the whole point. It just goes up and down. Have fun with that.
Sort of like Bitcoin.
Hey, my call is looking not terrible. Bitcoin 40,000. I need some quick moves to get to 60 by the end of the year, though.
Well, I don't know how much Bitcoin you bought to get to 40,000, but I just still don't understand why Bitcoin is much different than gold.
Got it. I replaced my house with a Bitcoin.
I
That's
knew
what
it.
I did.
You bought the
Yeah.
house made out of Bitcoin.
Yeah, it's meaningfully less comfortable to sleep in, but at least it's going to help me win my wager against Brett Horowitz.
Good. So we talked about something not looking like it really appears. Gold seemed like a great investment because it's up dramatically, but again, it's not that great compared to the last 11 years compared to the S&P 500. The other thing we want to talk about is, I'll start with the story first. There was an article in the paper talking about a lot of men who are buying these lab-grown diamonds because
Sure.
they're like 1/10 of the cost of real
Because they're
diamonds.
intelligent. Because they're intelligent. Sure.
However, they're buying giant rocks for the same price they would have gotten real diamonds for, and their fiancés/wives don't really love the big rock because they feel like it's ostentatious. They don't like wearing it around in public. They don't take it on vacation because they feel like it's just going to be ripe for being stolen. So, like, the guy's got a good idea, but it doesn't really work well in practice. The girl's not
All right,
very
Tim, are you saying that they buy a fake diamond that is much larger than the real diamond they could afford?
correct. Yeah, this is not cubic zirconia. This is a lab grown, so got almost all the properties of real diamond, but they're buying like 3 or 4 carats because it's like 1/10 of the cost.
Okay, and for the price of 3 or 4 lab-grown carrots, you could get one normal carrot?
I think even less. I think even more than that.
Yeah, I'm going to go ahead and tell you if I'm on the receiving end of that ring, you can go ahead and get me 3 to 4 lab-grown carrots. Thank you very much.
Okay, that's good to know.
If I can't ice skate in it, Brett, I don't want it.
I feel like you'd be held up in an alley somewhere, but okay,
I
if
don't
you
know,
want to.
dude. Look, you're sweet, but your Cracker Jack box ring is not going to cut it for me. I'm sorry.
So let's make the analogy here to what I want to talk about, which is this TSLY fund. Okay. What is TSLY fund? This is a fund that basically takes the Tesla stock and it adds on options on top of it and it sells options. Why does it sell options? Because it makes income. And what are so many clients focused on? Income. I love this stock because it pays a good income. I love this stock because it's got a good dividend. I love this stock because it's always paid a dividend. I love this fund here because it pays an income of 57% was the last annual distribution rate. Okay. So everyone looks at this beautiful diamond, this beautiful TSLY fund that combines Tesla stock and options and says 57%, and we take it all day long. However, the price of this investment declined from $20 to $11.58, a loss that was greater than the distribution itself. So again, I want people to stop looking at this beautiful ring and think about what it is and realize that the stock and the dividends are all part of the return, right? The ultimate answer is to get something that's got the highest return, not the highest dividend, not the highest shiny object, but the best investment after all is said and done, including income and appreciation and taxes and everything.
Okay, fine. This Tesla thing, how long has it been around? Because I think it's been around 1 year.
Yeah, it's launched a year or so ago. The Tesla stock, by the way, does not pay a dividend and it was up 29% in that same period, while this fund that paid this giant 57% distribution
Uh,
was
but
down.
but you're doing the 1 year thing. That's not long enough.
I think that someone's going to get distracted by this beautiful 57% shiny object over here and not realize that they actually lost money, where they could have bought the Tesla stock without the dividend and made 29%.
So what happens if next year it turns around and
And we'll have
Tesla
a
is
second
outperforming
conversation about
Tesla?
it.
Huh?
And we'll have a second conversation about it.
All right, you better mark your calendar then, dude. 1 year's not good enough for me.
You're
What if
focusing
they?
on the wrong thing.
No,
It makes the point. Stop looking at just the dividend distribution and look at total return.
I'm all about not just looking at one thing. Although you can live off income, whether you generate it from gains or dividends, it doesn't matter. Yes, total return, I'm all in. But 1 year, Brett, you're better than that.
Okay. We'll see. We'll see next year. I'll write it down.
You're better than that. I think Yield Max also has other products other than that. Is that fair? I think they have like an ETF suite. Yeah, they do. Knew it. They do this with NVIDIA also. And ARC. Oh my God, ARC. That's a fun one.
Okay. The story is to be continued, but let's not
Wow.
get it twisted.
I just went to their website. The distribution rate is 62%.
What's the return?
That's so funny. Man, you can't, yeah, if you're my mom would just beg, buy, buy, buy. That's so funny. 99% better. Okay, this is not a recommendation to purchase anything from Yield Max. Okay, interesting. Talk to me in a year from now. Year's not good enough. All right, my turn. Horowitz, Jerry Powell. He was an enemy a year ago. Not in my eyes, not in your eyes, but in the market's eyes. And yeah, he got real aggressive with interest rate hikes to the tune of 11 hikes since March of 2022. They went, I think, 4 meetings in a row, hiking 75 basis points. So we're, oh, what, 18 months into this whole thing? Almost next March, it'll be 24 months into
And
from the
they
start of the
are
cycle.
done. Meeting this week, I believe. They are done raising rates.
Yeah, I doubt that they're going to be hiking anything else. March, oh man, that's so funny. It was my anniversary at this started. March 17th, 2022 is when it started. In June, July, September, November, 4 straight 75 basis point hikes, followed by 50, 25, 25, 25, 25 July this year, and pause. So now we're looking at 5.25 to 5.5. Historically, markets bottom within the first third of these hiking cycles. That's why I know I did, I think you agreed with me. I thought the bottom was in last October, October 12th of last year, when the market fell by 25% and has since recovered and not breached that break from last year. When does Jerry get the like the pat on the back, the high five, like, hey, you did it. You did the whole soft landing thing. I don't like the soft landing thing. I don't think the economy ever lands. Eventually, there's going to be a recession. And I just think no matter what, they're going to point the finger and be like, see, look what you did. You broke it. So all I wanted to show here in these three charts was to touch on three items that have come up in conversation about, wow, these things are awesome in tailwinds. And they're such tailwinds that if they don't get under control, inflation's going to get out of hand. They're going to keep tightening to the point where something really breaks. So let's check on these very hot things and see how they're not so hot anymore. And we went from basically very hot to pretty good. And I'm paraphrasing from friend Sam Rowe over at TKR, at Ticker. He has a little blog post. So first things first, actually, before I go into the charts, because you made a face there, what do you have to say about the very hot readings?
No, I mean, that's all we hear about from the Fed. I know they have to say it. It's just like, well, we don't want to see this thing get out of control again, and people get, expecting inflation and that we think it's under control and it's not. Like, there is no signs that anything is not under control right now. Everything's under control. So I get there's a chance that things can go back, but I just feel like it's a chance that like I can find a needle in a haystack. Like it's just not going to happen that all of a sudden everything's going to turn around from what's happening now. So when you said like we worry about some of these things could spike again, that's what I made the face about because that's what they say. I just don't buy it.
Well, of course, because they looked at past economic wars, so to speak, and saw the crappier thing to have to fight is the double dip inflation, so to speak. When you think you have it under control, and then whoopsie, you don't, because that's harder and more painful to fight than stimulating the economy.
I
They'd
think they
rather
have
use those tools.
PTSD from the 80s. That's what they have.
Say it again.
They have PTSD from the 80s when that happened.
Yeah, 1,000%. That's fine. And that's what he did. So far it's looking good. So let's get to these three metrics and then we can talk because the reality is they're softening, which is precisely what people want. This chart I think is hilarious just because this chart had so many iterations, and this is showing the household excess accumulated savings, meaning there was always savings that existed. This is now the excess that was sitting on top of that. If you looked at JP Morgan less than a year ago, yeah, pretty basically January this year, JP Morgan, Barclays, all these big banks put out excess savings would be depleted by May, by June, some thought by December of last year. So it's just so funny how this chart keeps moving and the excess, it suddenly sticks around and it sticks around and it sticks around. Why? I have no idea. But I guess the point I'm trying to make here is the direction is proper. Excess savings was incredible through 2021 and it's come down. Checking on data point number 2, which is job openings. This is the one that, do you remember when we had 12 million job openings to 9 million or so people looking for work?
No, I think it
What I
was 12-6, wasn't it? It was 2-1.
Exactly, it was double. It was 12 to 6. Exactly. So we hit that high of 12. Now we've come down to a cool, not even a cool, a very normal 8.7 off a 7.25 average. And that 7.25 is last 10 years average. So is the job market falling out of bed? Absolutely. Employment rate falling out of bed? Absolutely not. 3.7. I guarantee you, and this is going against what I was calling for in the recession bid, because I was waiting for this to keep coming down and recession, and excuse me, and unemployment to tick up. There's not going to be a recession call with employment at 3.7%. It's not going to happen. And it's probably not going to go from 3.7 to 4.7. There's going to be something in between, and then it'll catch fire. It just doesn't look like it yet. So jobs from 12 to 8.7. And the last data point, that was the one that most folks were looking at, most economists at least, was this U.S. non-defense capital goods, excluding aircraft new orders since 1990. What the hell does all that mean? This is basically business investment, excluding aircrafts, because those are so expensive that they distort the data. And it's all new orders. So this is basically showing us the rip-roaring effect coming off the bottom of COVID. And while we're still above average, we're tapering off. And if to show disinvestment or lack of investment, it shows a leveling off of investment. Another healthy sign of an economy. It's still putting investment into business products, into capital goods, but at the same time, what Jerry wanted is happening. He's getting it.
So before you add the but in there, Mr. Doom and Gloom, I will say that this is the reason why the market is up for a high for the year of 20% roughly. It's only about 4 to 5% off its all-time highs. And it's all because the numbers have worked out perfectly. Not too hot, not too cold. What we said, the Goldilocks effect, everyone's happy with what's going on. And it doesn't mean that it's all roses going forward. Things could change very quickly, if that unemployment rate jumps up or people stop spending. But for now, all signs point to positive.
Saying there's going to be a recession is not doom and gloom. Saying there's going to be a recession is being Captain Obvious, because like the water cycle, it just happens. I thought that it would start this year. Doesn't look like it, but it's only the middle of December. That said, a recession, Brett Horowitz, but don't be captivated by the great financial crisis or COVID. Those are not the only recessions that we can have. We can have short, shallow recessions that are just a natural corrective action that then set a plateau for the next expansion to happen.
I'm not saying we'll never have
all this data just points to the next recession being short and shallow.
I'm not saying we'll never have a recession. I understand that. I just don't see
I don't
any
know if you do.
signs.
I don't know if you do.
I've lived through a lot of recessions already in my life, my career.
No one knows. All the listeners, I guess Brett's never seen a recession. Does he know? Can he spell it? Does he know how to spell a recession?
I've seen a horrible recession, 2008, 2002, and 07, 09, in 2020, 2020, almost 22. Didn't quite hit one, but there's been a bunch of them.
Yeah, less since World War II. Doesn't matter. The gray bars on this last chart are the recessions. Look at that. After you get kind of these kind of peaks, so to speak, you tend to get a little gray bar that plugs in. Is it going to happen for sure? Not necessarily. So who the hell knows? It'll come when it comes. Short and shallow is my hopeful bet. But all these last three charts basically show that what Jerry and his crew have tried to do has been playing out of markets. And I think it's important for them to keep talking the markets into kind of submission, so to speak. Because the minute he starts talking about cuts, there goes everything.
We'll see.
And some of us need housing prices to come down so we can move.
Oh yeah, let's do it for Marco so he can buy his house. Sure. That's what this is all about. Forget the economy. It's for Marcos.
7-year mortgage rates are not fun. Excuse me, 7% mortgage rates are not fun.
All right, we got to wrap it up. But anyone in Marcos's camp, in the recession camp, feel free to go over there. It's a pretty lonely place. My camp, full of joy. Come over here.
You got to take a stand. You got to take a stand. It doesn't look good for the recession callers for 2023, but we live to fight another day.
All righty.